Welcome to today's market report.
World shares rebounded on Tuesday on the notion inflation may be a peak after Target Corp said it would offer deep discounts to clear inventory as consumers change their shopping habits, while Treasury yields fell after a surprise rate hike in Australia. Target, a major retail chain, cut its quarterly profit margin forecast and said it would mark down prices in the second quarter in a surprise revision that sent shares of its market value by 2.31% lower. Target, along with Walmart, had reported a much steeper than expected drop in quarterly profit in May, ruling the retail industry. The retail sector of the Pan-European Stoxx 600 index on Tuesday closed down 0.94%, but Target's warning was seen as having a positive impact on inflation and could help the Federal Reserve and other central banks fight the sharp rise in consumer prices without sharply boosting interest rates and sparking a deep slowdown. On Wall Street, the Dow Jones rose 0.8%, the S&P gained 0.95%, the Nasdaq added 0.94%. The Reserve Bank of Australia overnight raised rates by 50 basis points, the most in 22 years, and flagged more tightening ahead as it moves to restrain inflation. The ECB is expected to start a tightening cycle later this week. Central bankers are playing catch up with the fact that inflation is very, very high, and they need to kind of tamp it down through higher rates. The yields on 10-year notes fell to 2.985%, below the key 3% threshold ahead of data on Friday, expected to show still high US inflation. A high reading would firm up expectations that the Fed would raise rates more than the anticipated 50 basis points at its upcoming policy meeting next week and in July. The benchmark 10-year German bond yields also dipped 1.6 basis points, but held near Monday's highs ahead of the ECB meeting on Thursday. GBP/USD marches firmly to fresh weekly high, just under 126. Euro/dollar tests the 50-day moving average around 107.
This is today's market news. Thanks for listening. We'll see you next time.